Every 3 months, we wait patiently for the poster child of the AI rally to give us a spectacular earnings report card. And well, today, that wait is over as we just have Nvidia's Q3 report come out after the bell, and spoiler alert, these results are nothing short of spectacular. We'll get into everything you need to know in terms of a revenue, a profit, and earnings, and the all-important cash flow perspective. We'll take a look at some comments made by Nvidia CEO Jensen Huang on the press release. Now, despite a fantastic Q3, things may not be as rosy over at Nvidia heading into Q4 because we got guidance for the upcoming quarter on the revenue perspective, and maybe not coming in and meeting expectations for what most bulls and most Wall Street analysts really had for this company. Now, when we get over to the technicals, you'll see over the past 2 years, this one has been in an elevator ride higher, now trading closer to the bottom end of a channel. So maybe you have some buying opportunities coming up with Nvidia that you could look to pounce on maybe as early as tomorrow. Hey guys, hope you're doing well out there. It's time to check in with shares of Nvidia that year to date are up nearly 200%. Yeah, that's right, 200% just over the past year. Over the last 6 months, you're up close to 50%, but over the past month, you've seen that rally fizzle out up just 3%. And again, in the after hours, you're seeing shares down close to 2%, so giving up some of those gains over the past month. Now, that 200% rally over the past year is for good reason. Keep that in mind. You've seen this company post stellar results quarter in and quarter out. And yeah, this most recent Q3 was no different. You had revenues come in at $35 billion. That was good for 94% growth year over year, beating expectations by $2 billion. Now, first thing I want to point out is Nvidia loves to do this. They love to come in with a $2 billion beat on the top line revenues. They've done this for a lot of the past quarters. I believe the most recent Q2, they came in with right around a $1.3 billion beat. But what they generally like to do is come in with a $2 billion beat on the revenue expectations. Now, the other thing I want to point out is the data center revenue continues to chug along and be the bread and butter that powers this business higher. You have a $30.7 billion data center revenue figure in the most recent quarter. Again, that surpassed your overall revenues in the previous Q2. That's something they consistently like to do, is post a data center revenue figure that outpaces or outstrips the total revenue of the quarter before. That's again something they did in this most recent quarter. Now, the other thing I want to point out is $35 billion is actually an acceleration in terms of the revenue figure we've been putting up. Now, this revenue growth rate of 94% may not be as rosy or as nice to see on paper as maybe 130%, 200% that this company generally has been putting up. But what I want to show you is this company likes to add nearly $4 billion in terms of a quarterly revenue run rate. And in this most recent quarter, you added nearly $5 billion. So you went from $30 billion in Q2, now at $35 billion in Q3. So in fact, this company accelerated their pace of revenue growth on a quarter-over-quarter basis. That is certainly impressive to see. Now, a lot of that, of course, is coming from the data center revenue expansion. You have the ramp up of Blackwell. You probably didn't see a whole lot of Blackwell shipments, if any, in this most recent Q3. Certainly those H100s and H200s, Grace Hopper GPUs, certainly are the ones making up a majority of this data center revenue, but you also got a pretty good acceleration in terms of gaming revenue up to now $3.3 billion. You also got a nice bump up on your auto revenues up to nearly $450 million. Again, last quarter, you were at just $350 million. So you added nearly $100 million quarter over quarter on your auto revenue side. That is certainly impressive, especially as the AI and self-driving market begins to now heat up. I think the auto market, especially for Nvidia, has legs to run moving forward. But again, the bread and butter remains the data center. We'll take a look at some comments regarding the data center as it pertains from Nvidia CEO Jensen Huang. He's saying the age of AI certainly is in full steam, propelling a global shift to Nvidia computing. The demand for Hopper and the anticipation for Blackwell, which is now in full production, are incredible as foundation model makers scale pre-training, post-training, and inference. He also went on to mention AI is transforming every industry, company, and country. Enterprises continue to adopt these AI workflows. And yeah, well, the future certainly looks bright, not just for Nvidia, but all companies and really countries investing heavily in AI infrastructure, now looking to build out that sort of hardware layer that then will be layered on with software somewhere down the road. So certainly this Q3, we got a stellar print from Nvidia from a profit perspective. Also came in with a nice non-GAAP beat of 6 cents of bottom line EPS, nearly 81 cents. Now, the rosiness sort of seems to end over there in terms of Q3 because the all-important Q4 guidance isn't really as upbeat, I would say, as most people would anticipate, especially I would actually say not as upbeat despite posting $35 billion in Q3 revenues. So they're guiding for Q4 revenues to come in the range of $37.5 billion plus or minus 2%. So first of all, the consensus estimate on Wall Street, the average estimate on Wall Street was close to $37 billion flat. So Nvidia coming in just a shade higher, call it $500 million higher than the average Wall Street estimate. So that is red flag number one, is the fact that they usually like to come in with a $2 billion raise on guidance. They're only really coming in with a $500 million raise. So whenever you have a company that's known to come in with a raise in terms of guidance, only come in really with inline expectations, and then especially come in underneath the high-end expectations on Wall Street, which was closer to $44 billion, that is disappointing. And that is probably one of the reasons why you're seeing shares sell off in the after hours. Now, the other thing that's surprising is, again, this company generally likes to add nearly $4 billion in terms of quarter over quarter revenue. In this most recent quarter, they added nearly $5 billion quarter over quarter. So if they're guiding for revenues to be roughly around $37.5 billion, that would be an increase of right around $2.5 billion quarter over quarter. Again, that would be far, far slower than the growth we've seen over at Nvidia over the past, call it 8 to 9 quarters. So that's certainly what is, I think, sending shares lower and is concerning investors, is the fact that this guidance is coming really in line to what Wall Street anticipated rather than higher, closer to 38. I would actually expect a figure closer to $39 billion. Again, based on that $35 billion quarter we just got, adding on $4 billion would bring us close to $39 billion. So that is certainly where my estimates, or rather expectations, for the upcoming Q4 currently sit at. And so if certainly Nvidia comes in with just $37.5 billion, no doubt, absolutely no doubt, that would be disappointing for this company. Again, a company that's up nearly 200% just over the last 10 months, call it, and seeing that revenue growth come basically down into the mid 50, 60% from a previous growth rate of 100%, that is disappointing for a company still with a relatively large forward valuation, nearly 50 times a forward earnings multiple. So certainly if Nvidia comes in with $37.5 billion, that would be disappointing. In my opinion, though, I actually expect this company to come in with a number closer to 39, if not $40 billion, because again, we got the comments in this most recent press release that the demand for these Nvidia H100s and even Blackwell is through the roof. In fact, we got the comments saying that we will be shipping both Hopper and Blackwell systems in the upcoming fourth quarter and fiscal 2026, and then both Hopper and Blackwell systems have certain supply constraints, but the demand for the Blackwell is expected to exceed supply for several quarters in fiscal 2026. So they do mention demand is certainly outstripping the supply, and I think that's what you can expect basically into fiscal 2026. And so in my opinion, a bit surprising, a bit head scratching why this company is only guiding for a Q4 revenue figure $37.5 billion. Certainly we'll have to wait. If they can come in with a figure close to, in my opinion, $39 billion, that will be a good sign. And then that would honestly bump up the revenue figures or the revenue expectations, I think, for the fiscal 2026 quarters to be well in excess of $40 billion a quarter. Now, I think we'll just have to wait. I think part of this is Nvidia tamping expectations from Wall Street in terms of the upcoming revenue growth rates, but I think part of it is also they're unable to really gauge how they'll be able to really meet all that demand despite being supply constrained, I think mainly from that manufacturing side. Now, in my opinion, one of the best ways to gauge demand for Nvidia's products, I think, is to look at their largest customers, one of them customers being xAI, as in the latest funding round, this startup now hit a valuation near $50 billion. So the startup led by Elon Musk, of course, raised close to $5 billion, again, based on that $50 billion valuation. What's interesting to know is just last month, the company was valued nearly $40 billion. So month over month, these startups and venture capitalists really throwing money at these AI startups, as you got a nearly 25% bump on the valuation, again, just month over month. And then what's interesting to note as it pertains to Nvidia is the fact that most of those proceeds will be used towards purchasing Nvidia H100 GPUs, roughly 100,000 of those, and those will make up a large cluster of H100 chips. And in fact, we got that from the press release. As we take a look, in this most recent quarter, xAI's Colossus supercomputer cluster consisting of 100,000 H100 GPU hoppers. Again, this was one of their latest Q3 wins. In terms of other wins in this most recent quarter, they saw H200s now being available in terms of different cloud services on the AWS clusters in CoreWeave, also on Microsoft Azure and Google Cloud, and then eventually coming to Oracle Cloud as well. So they're certainly seeing demand. Again, just telling you all the different ways that demand is outstripping supply. Part of that is because their customers getting relatively large valuations and relatively easy funding rounds from VC money that they can then look to move into those H100 and H200 GPUs that eventually the revenues end up in Nvidia's pockets. Now, the other thing we got is a couple days ago, we had this report coming out of the information saying that the Blackwell AI chips are reportedly overheating in certain server racks, and that's based on their new customers, creating concerns, and that they may not have enough time to open some of those new data centers, again, utilizing that latest and greatest Blackwell GPU. Now, these server racks certainly are absolutely massive as they hold nearly 72 chips, that is 72 Blackwell GPU units together through the form of an NVLink. And then I believe NVIDIA's engineers will begin to continue working on this, working with their customers. Really, I think this was information that was never really agreed or denied by NVIDIA themselves. I think certainly they'll figure this out if that's happening with some of their customers. I think these early kinks absolutely do tend to happen, especially in new products, especially products on the latest and greatest bleeding edge. And so I think this is really a much ado about nothing. I think over the next couple of months, you'll see these news stories sort of begin to fade out as NVIDIA begins to work with their customers to address really any issues that come up. Now, in terms of the latest quarter, despite it being fantastic, if there's one place you want to poke a hole in, that's probably going to be on the gross margin side, as you're seeing those gross margins flattening out on not just a year-over-year perspective, but also sequentially quarter-over-quarter. You're seeing those gross margins declining. They declined in Q2 compared to Q1. They're once again declining in Q3. I think part of this is because of just gross margins simply topping out. This company really having the market dominant position that they've had over the past couple of years. You'd probably expect competition to begin to ramp up and begin to compete in some of those similar products. And so maybe you're not seeing the same gross margin expansion that you did at the start of really 2023 and 2022. The other reason I think you're seeing these gross margins sort of flatten out is because this company is in a production ramp for the upcoming Blackwell chips. And so really you can compare it to a company like Tesla. Anytime they're ramping up a new model for one of their vehicles, you see those gross margins take a hit. Certainly Nvidia is not to the extent of a physical vehicle maker, but those gross margins I think are also flattening out because of that Blackwell ramp happening in the current quarter we are in. Now, in terms of the financials, there's a lot to love here, and in fact we'll get over to the question as what this company is going to do with a lot of their cash flows that they're generating. This company is printing just absolute boatloads of money to the gross profit line. You see that is doubling year over year up to $26 billion because your revenues are jumping nearly 100% and your cost of revenue is going from just 4.7 billion up to call it $9 billion. Again, you get to bolster on a ton of that revenue on to your gross profit line. For the last 3 quarters, similar story, you're on nearly a $70 billion gross profit run rate. Pretty much by the end of the year, I expect this company to post a figure very close to $100 billion in terms of gross profit. That certainly would be extremely impressive, especially compared to last year. You were only at $27.5 billion in gross profit through the first, again, 9 months of the year. Now, in terms of operating expenses, you're seeing relatively well controlled operating expenses up from 2.2 to now call it $3.4 billion on the R&D side. Also on the SG&A side, up just fractionally from 700 million up to 900 million. Frankly, these are rounding errors over at Nvidia, and so now your operating expenses coming up to just $4.3 billion. That means you get to bolster on nearly $21.8 billion in terms of operating income. Again, last year you were at just $10.4 billion. Huge improvements year over year on the operating income side. Again, continuing to still double your operating income as you continue to double your revenues as well. Now, despite that, you also have some interest income being earned over at Nvidia. This company is sitting on a huge amount of cash, as we'll see in just a second, and so they continue to earn that interest. And then with that excess cash flows, you see these shares outstanding begin to dwindle down. I think that's really all this company can do is in terms of a buyback, really deploy a lot of that free cash flow in terms of that buyback. Now, from a balance sheet perspective, really nothing to worry about. You have a pristine balance sheet, nearly $38.5 billion in cash. 9 months ago, you were at just $26 billion. So you've added close to, $12 billion in cash and cash equivalents just over the last 9 months. You've also bolstered on your accounts receivables as demand continues to be extremely strong. In terms of the liabilities, you have $30 billion in total liabilities. So again, your cash, as it currently sits at right around $38.5 billion, fully outstrips not just your short-term debt and your long-term debt, but actually outstrips your total liabilities as a whole. So from a balance sheet perspective, nothing to really worry about. And then from a cash flow perspective, this is what I really love to see. $17.5 billion of operating cash flows over the last 3 months, nearly $47.5 billion over the last 9 months. And unlike Intel, this company isn't really spending a whole lot on foundries, on things that don't really matter, as their capex was just at $800 million for the most recent quarter, giving them nearly $17 billion of free cash flow to sort of play around with. So what do they do with all that cash? Well, firstly, they deploy nearly $4.5 billion in terms of marketable securities. So they look to just buy some securities, probably some US treasuries, and then the vast majority of their cash flows, nearly $11 billion, going straight into the repurchase of common stock, significantly accelerating it year over year. Again, despite the stock being nearly 200% higher, you see this company spend a boatload more on that buyback. In my opinion, that's actually a good thing, because as a shareholder, you want to see cash return to you. A buyback is one of the best ways that can happen. And simply, this company has no real other use for all that free cash flow. And so they put it towards a buyback. You also continue to get a small dividend that will continuously, in my opinion, be raised year over year pretty significantly. So this company, from a financial perspective, is doing everything pretty much as you would like. They're printing boatloads of cash flow. They're returning that to you. They're adding it to their balance sheet, which remains absolutely pristine. It's the revenue guide for the upcoming Q4 that has me a bit perplexed as to why it's coming in at just $37.5 billion. I fully expect this company to post a figure close to $39, if not $40 billion. And in my opinion, that is enough to keep shares moving higher, at least over the next, call it 6 to 9 months. Again, you still have Blackwell expected to begin full production in the current quarter and then begin to ship out, I believe, in Q1 into fiscal 2026. And in my opinion, I think demand for Blackwell is absolutely insane and through the roof. And I believe that will certainly show up in Nvidia's numbers moving into fiscal 2026. And so that really presents you, from a fundamental perspective, a pretty solid underlying foundation as to why to continue to hold shares in Nvidia. Now, from a technical perspective, you also have a reason to maybe step in and be a buyer, because you're trading near the bottom end of this long-term uptrend that's been intact for nearly 2 years. You're trading close to $145 a share. You certainly have room to continue to move to the upside, maybe not as high as all the way up here to the 230s, 240s. That certainly would bring you back all the way to the top end of the range. But I think you can continue to staircase your way higher simply because demand for these products over at Nvidia remain relatively strong, and this company continues to meet and exceed expectations pretty nicely. Now, if in terms of breaking down from a technical perspective, Nvidia comes in here and breaks below this uptrend, I think you do have some support right here in the $128 range. You've seen some areas of resistance at that point, which should, in my opinion, act as support on the way down. Really, if there was a buy zone that you're sort of holding out for Nvidia, should be within this green rectangle, somewhere between, call it $95, $97 up to, call it $125 a share. That should be your range. If Nvidia shares certainly do come in and step into that range, I think at that point, you're absolutely stepping in and being a buyer in shares of Nvidia. This is the range where you probably see some consolidation and you'll find meaningful levels of support. If not, I think you can absolutely continue to hold your shares, as their customers like XAI, also like Microsoft, Google, and Meta, certainly have no plans of slowing down capex into 2025. And all these companies that are Nvidia's largest customers on their conference calls continue to tell you that they will continue to spend heavy amounts of capex into next fiscal year, that in my opinion, Nvidia will be the beneficiary of over the next couple of quarters. That was my take on shares of Nvidia. One, from a technical perspective, I think does actually make a lot of sense to step in at this point. You probably have some downside protection over here at $130 a share, but you certainly in my opinion have room to the upside despite running up nearly 200% year to date. In my opinion, I think you can still, believe it or not, see the outperformance that you've seen with this company. Maybe not to this extent, but you absolutely still have another, call it 10 to 20% in upside with shares of Nvidia moving into the next calendar year. Let me know your thoughts on this one in the comment section below. As always, thanks so much for listening. The much anticipated Nvidia report is now here. I think Q3 was solid. Q4 revenue guidance coming in a bit lighter than I think what we anticipated, but if I had to guess, Nvidia will come in there 3 months later and post yet again a stellar revenue figure. Let me know your thoughts on this one in the comment section below. As always, thanks so much for listening, and I'll catch you guys in the next video.